Welcome back to Explain the Charts. Today, March 4th, 2025, we're dissecting USDCAD, looking at both the latest news and the charts to determine the best trading strategy. The big story is the ongoing trade tensions between the US and Canada, with retaliatory tariffs taking center stage. According to recent reports, tariffs imposed by both the US and Canada are impacting the Canadian dollar, with news suggesting the Canadian dollar is losing ground. Also, markets anticipate dovish moves from the Federal Reserve, increasing the likelihood of interest rate cuts in the June meeting, adding selling pressure on the US dollar. Let's also keep in mind today's report that Germany plans to reform debt to allow for more defense funds, potentially worth 500 billion euros, which could affect the euro and indirectly influence USDCAD. The US and Ukraine are preparing to sign a minerals deal tomorrow, but it's unclear how that will affect USDCAD directly. It could have ripple effects. Now let's switch gears and dive into the USDCAD chart data, starting with the one-day time frame to get a broad overview. Looking at the daily chart, we can see a lot of volatility. We see a rise from October 2023 until about January 2025, with many dips and peaks along the way. Then a dip during January 2025, followed by a relatively stable period until April, then high volatility again through October 2024. And the price generally declining through today, March 4th, 2025. Zooming in on the one-day chart from late October 2024 to December 2024, we observe a significant drop from around 1.38 to 1.32. This aligns with news that Canada's economy showed solid growth in Q4 2024, driven by strong domestic demand, and it had a strengthening effect against the US dollar. We also see the Bank of Canada easing interest rates faster than the Fed, according to FX Street, and this is pressuring the CD. This makes the Canadian dollar weaker and USDCAD lower. Now, let's move to the one-hour chart for a more granular view of recent price action. Focusing on late February to early March 2025, it seems like the price has been trending slightly upwards with some pullbacks. We see the price hit 1.44937 at the end of this time frame. Finally, let's examine the 15-minute chart for a high-resolution view of the most recent price movements. Looking at the 15-minute chart for March 3rd, 2025, we see intense up and down price action all in a very narrow range between about 1.447 and 1.443. The price seems to have a hard time breaking out of this range, and it appears to be consolidating. Let's recap. Key levels to watch are around 1.32 and 1.38 on the downside and the upside, respectively, based on the daily chart going back to October 2023. The Fed rate cut expectations are definitely a big factor to watch. If the market perceives a higher likelihood of rate cuts, we could see further downside pressure on USDCAD. The situation with tariffs is also important, and there are threats of immediate increases if Canada imposes retaliatory tariffs, according to the news. I think there's a 50% chance that the price will remain in its narrow range over the next week, based on this consolidation. But if tensions escalate and the Fed gives strong signals of easing, we might see a breakdown from the range. Always remember to manage your risk and use appropriate stop-loss levels, and these are just predictions and not financial advice.